The world is changing faster than most investors realize. The US and China are locked in a rivalry that is reshaping every market on the planet. Inflation is back, defense budgets are exploding, and the old rules of investing simply do not apply anymore. So, how do you protect your wealth? And more importantly, how do you grow it? Thoth Investment has been analysing global asset allocation strategies since 2017. Today, the Kairos is giving you a clear, step-by-step answer in under 10 minutes. Let's get into it. Let's start with the big picture. Joshua Rovner of the Brookings Institution recently published a piece in Foreign Affairs. His conclusion was sobering. He believes today's geopolitical climate is heading toward a prolonged war of attrition. He compared it to the Peloponnesian War, the ancient Greek conflict between Athens and Sparta, and the parallels to today's U.S. China rivalry are hard to ignore. Scholars call this the Thucydides trap, when a rising power challenges an established one. Conflict, in some form, almost always follows. Ray Dalio, the founder of Bridgewater Associates, one of the world's largest hedge funds, agrees. He believes we have entered a phase of what he calls a prolonged world war, not necessarily a hot war, but a financial, technological and geopolitical war being fought on every front simultaneously. And wars are expensive. Financing surging defense budgets will require massive tax increases, higher debt issuance, expanded money supply, and ultimately, financial repression. That means your savings lose value over time, quietly, consistently. The IMF confirmed this in its World Economic Outlook this past April. Surging defense spending carries severe macroeconomic consequences for every nation involved. Here is the bottom line. The era of low inflation and near zero interest rates is over. Retail investors must now build portfolios designed to survive and thrive in an environment of structural deficits and persistent inflation. The Kairos has a 3-step framework for doing exactly that. Step 1. Capitalize on the defense supercycle. NATO members and European nations are scrambling to build independent military capabilities. The threat is real, the urgency is real, and the spending is accelerating at a pace we have not seen since the Cold War. South Korea is already ahead of the curve. It has rapidly expanded its defense exports, delivering battle-proven, cost-effective weapon systems that are winning contracts across the globe. Here is what makes this investment thesis so compelling. European and South Korean defense contractors are positioned to capture an enormous share of the global market. And this growth will not be spread evenly. It will be heavily concentrated in 3 critical areas: artificial intelligence, aerospace, and shipbuilding. These are the industries that determine who wins in modern warfare. And they are the industries that will define the U.S. China security race for decades to come. If you are not positioned in defense, you are leaving one of the most powerful structural tailwinds of this era on the table. Step 2. Invest in green and renewable energy as a geopolitical hedge. This might surprise you, but stay with me. The threat of a Strait of Hormuz blockade in the heart of the Middle East has exposed a critical vulnerability. Asian and ASEAN supply chains depend heavily on oil flowing through that single choke point. If it closes, the economic consequences are catastrophic. Nations across the world are watching this, and they are drawing the same conclusion. Dependence on Middle Eastern energy is a national security risk. Dependence on American stability is no longer guaranteed. A new energy supply chain is needed, one that cannot be weaponized. That is exactly what is driving the next wave of renewable energy investment. This is not idealism, this is geopolitical necessity. Countries are not going green because they want to, they're going green because they have to. And that distinction matters enormously for investors. The capital flowing into renewable energy over the next decade will be unlike anything we have seen before. Getting ahead of that trend now is one of the most strategic moves a long-term investor can make. Step 3. Position for the resurgence of domestic manufacturing. Here is something that often gets overlooked. You cannot have a strong defense sector without a strong manufacturing base. Winning a modern war requires high productivity, massive output, and supply chains that cannot be disrupted by a rival power. Countries ramping up defense investment are simultaneously investing heavily in materials, parts, and industrial equipment. They are building self-reliance, and the United States is leading this charge, with aggressive policies targeting semiconductors, shipbuilding, and steel. This is not temporary stimulus spending, this is a structural shift. A manufacturing renaissance is underway, and the companies at the centre of it, particularly those in advanced robotics and industrial automation, are positioned for extraordinary long-term growth. So, how do we translate all of this into an actual portfolio? Here is the Kairos strategic ETF lineup. First, anchor your portfolio with ALLW. ALLW tracks Ray Dalio's legendary all-weather strategy. Think of it like all-weather tyres on your car. It keeps your portfolio stable regardless of what the economic climate is doing. This ETF gives retail investors access to the same balancing strategy used by the world's largest hedge fund. It holds a carefully calibrated mix of stocks, commodities, bonds of different durations, and strategic assets like gold. When one part of the market falls, another part rises. That balance is the foundation of everything. Second, deploy the SHLD ETF. SHLD is your direct play on the Defense Supercycle. But here is what makes it different from traditional defense ETFs. It does not just give you exposure to legacy US defense companies. It includes dynamic global players in Europe and in South Korea. That means you capture the established leaders of today and the high-growth defense innovators of tomorrow. In a world defined by geopolitical risk, SHLD is where risk becomes opportunity. Third, consider the BOTZ ETF. BOTZ captures the intersection of AI and robotics. And here is why this matters. The real-world impact of artificial intelligence will ultimately depend on hardware. Physical machines, from industrial robots driving manufacturing competitiveness, to advanced humanoids redefining what labour looks like, robotics is the physical manifestation of AI. If you feel that traditional AI software investments have already priced in most of the upside, BOTZ gives you the hardware layer, the infrastructure behind the intelligence. Finally, let's talk geographic allocation, the macro triangle. We recommend a 3-country framework: the United States, Canada, and South Korea. For the US SPY, the S&P 500 ETF. This is the heart of global innovation and capital. It drives the growth engine of your entire portfolio. For Canada, EWC, the iShares MSCI Canada ETF. Canada is your shield, vast natural resources, a resilient financial sector. It hedges against inflation and adds deep stability when markets get turbulent. For South Korea, EWY, the iShares MSCI South Korea ETF. South Korea is the global arsenal, the advanced manufacturing powerhouse. It provides growth potential and the hardware backbone for the physical AI era. Together, these 3 countries represent something far more than a collection of international stocks. The United States brings capital and technology. Canada brings resources and food security. South Korea brings manufacturing competitiveness and defense innovation. This is a strategically complete macroeconomic portfolio, built for the world as it actually is, not as it used to be. The old investment playbook was written for a different world, a world of low inflation, stable geopolitics, and predictable growth. That world is gone. The new playbook requires understanding macro forces, defense, energy, manufacturing, and geography, and building a portfolio that reflects where the world is actually headed. That is what the Kairos is here to help you do. If this gave you a new perspective, hit the like button, subscribe for weekly macro insights, and turn on notifications so you never miss an update. See you in the next one.